Hi, this is Chris Buss with Traders Profit Compass. I've got some trades about to happen for you for Monday, August 16th. Okay, I was digging around a little bit over the weekend. I was taking a look at the transport index. You can see that coming out of the November low, there was a nice run up, and it stalled out in early April, and we've been correcting ever since. And you can see I've laid on the Fibonacci retracements here, and you can see price come in and actually tagged the 50% halfback and popped back up and has been making a recovery. And what caught my eye about this chart is, number one, RSI breaking out of the bearish regime up into the bullish regime above 50. We've got a move higher in momentum, still shy of the zero line, so there's still work to do. But then in price, you can see here that price has recovered all of the moving averages, and just looks like Wednesday of last week took out the 50 EMA, and so now all the moving averages below should act as support going forward. So that got me thinking. I started to kind of drill down in some of the transports, and actually, if you look over at XLI, the Spider ETF for industrials, that has broken out too. So I took a look there as well. So XPO is a logistics provider, delivery service type company, probably not a lot different than FedEx or UPS. You can see here that on Friday, just breaking out here above, call it 88.50, 89, right here at 90 on this breakout. So again, RSI breaking above 50. PPO on the way up, breaking above the zero line in the bullish territory. I mean, all-time highs you got to buy. So I like this long against 89, and you can set your stop just below. Notice this separation here starting to happen after this compression of all the EMAs. So now price is above all the EMAs, walking up the 8 EMA with the 20 and the 50 just below. So I'm looking forward to this, extending this run and continuing the breakout. JB Hunt is a trucking company. You can see the corrective action coming down into, what is that, 157, working its way back up towards the highs. What I do here is alarm 177.50, and if you get that breakout at 177.50, I think it's got a good chance to take out this all-time high up here at 181-ish. Again, you've got the EMA compression, price making an impulsive move higher. I would set your alarm there at 177.5, and I like that long against 177.5 once price breaks out. And on these, a lot of it will depend on your particular style, but in general, I don't like to front run these breakout areas, because this will be resistance until it's not. So I wouldn't be surprised if there was weakness in the market or just some general backing and filling in here, maybe put in a little bull flag before it breaks out. And so I don't want to get trapped, taking a long and then having price decide to just, hang out for a week or two under resistance. So I usually just set my alarm where I'm interested in taking the trade and then wait for it to fire to get long. KNX is another trucker right here at the prior highs. We can see that 50.5 has proven to be trouble in the past. There's some rejections here, 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 and now we're back here again. But PPO is above zero and RSI is rising. I like the chances that KNX breaks out here above 50.5. That's where I would set your alarm. And just like the other ones, the EMAs are all bullishly stacked. And once you get that breakout there, you'll have a very objective, tight, long entry against 50.5. You can set your stop just below at, say, 50. So yeah, I like these breakouts to new highs to get long. Looking over at the railroads, CSX had a couple months worth of corrective activity. Now it's right back up to the top of the prior high at 34.50. Very much the same look, the same setup as the ones we've just been talking about. RSI above 50 and rising. PPO rising and above the zero line puts it in bullish territory. You can see that on Friday we had a touch of this 34.50 area that got turned away. So just like on the other ones, I would set your alarm at 34.50 and wait for the breakout. Be patient, because there could be some either backing and filling, or carve out a bull flag just below resistance and then go for the breakout if the market stays constructive. Another rail, UNP, right back up near the highs. Let's call it 228. I would set your alarm there and take it on the breakout. Just like the other ones, RSI breaking above 50 and rising, PPO moving into bullish territory above the zero line, with price above all the moving averages, with all the moving averages stacked bullishly, the 8 over the 20 over the 50, and all of them over the 200. Now, one thing I want to point out is that adage of birds of a feather flock together. It's not a coincidence that, the two trucking names that I picked out and the two rails that I picked out have nearly identical charts. All of them are testing their prior highs. And that's often what you see, is that when a group or a sector decides to move, they move together. And if you're going through your charts, say, there's a bunch of truckers, right? Pick the strongest ones. Don't pick the laggards and say, well, this one's going to catch up faster. I always like to buy strength, buy leadership in the stocks that you choose. And I think that idea will serve you well, because very rarely will you see a laggard, say a trucking company that just has a bad looking chart, or certainly not as strong as others in the group. You're not going to see them rocket higher and outperform the leadership names. So while you may see an advance, that's fine, but I think you always want to stick with the leaders. They're leaders for a reason. The charts look the best for a reason. We don't even need to drill down into what those reasons are, but take it upon faith that if the chart looks the best, it is the best. So when you're going through these different sectors, I would always look for the strongest names and the strongest charts to try and be involved in. Now I've just got some, I won't call them random names, but different names. Airbnb testing this 152 150 area after coming off this double bottom low. Notice the bullish divergence that I don't have marked on here, but let's look at this low here, a low in momentum, a low in RSI. We come over here with price at the same location, but with much higher momentum and higher RSI. That's your double bottom low with bullish divergence. That's usually a money setup, and this double bottom would trigger on a break above 152.50. And the way you get a measured move target on that is you take this distance, 130 to 152.50. What is that? $22. So add $22 onto 152 and you get 175. So that would be my target on a breakout above 152.50. So I like this setup. No need to front run it. Put your alarm there. If you get a trigger, you can take it long with a stop just below. Also, I want you to take note of this big volume over price void over here where there hasn't been much trading, and contrast that with down here where we've had a lot of trading. And really the largest volume over price bar is right here at resistance, and that's where most of the trading has happened. And it would also be a place where if it's going to reject, it's going to reject right here. So another reason not to front run the signal. Once it pops out, you're going to have plenty of time to get long against that 152.50 area and look for that move up to 175, 180. You can see this is a very large volume over price bar, at least in this upper range. And if you extend that across, I should have done that, brings you right into like 182.50. So that's where technical resistance would come in. So that aligns pretty well with the double bottom low measured move up to 175 and technical resistance up towards 180, 182.50. So I like that setup. Steel has been particularly strong in the last couple of weeks. Here we've got US steel been consolidating in a range between 22 and 29. Now it's testing this area for a breakout. If you get a breakout above 29, I think you can take it long, and the measured move target being $7 added on to 29, my measured move target would be 36. So this is a constructive look on US steel. Notice price above all the moving averages. They too are bullishly stacked, like in the other examples, with the 8-day above the 20, above the 50, and all of them above the 200. Clorox is a bracket trade that we had set up the other day. What is a bracket trade? Well, when you get a gap down or a gap up, what you do is you alarm the bracket. And in this case, it was 167.50 on the high side and 160 on the low side. So that was the high and low of the range on the day of the breakdown, leaving a big gap above that has yet to be filled. Now, it took a couple of days, but now just on Friday, price has broken into this $13 gap. So now there's a clear path for that gap fill. So I still think it's close enough that if you wanted to take this, you could. You would set your stop, or you'll be shooting against 167.50 with a stop just below, say 166, something like that. So you're giving yourself $1 worth of risk for a potential of a $13 gain. And I like that. I like those odds. I like the risk reward on that particular setup. DraftKings had been in a downtrend for quite a while. Found something close to a double bottom low. Notice the bullish divergence here. Price was almost at the prior low. Now it's rebounded up. Found this resistance area at 55. I think if it can take out 55, I think it can find 59 as a first area of support. You can see Friday that it didn't like that. It didn't like 55, pulled back a little bit. And that's just that's another illustration of why you don't want to front run these signals, because anybody that bought right there thinking, oh, it's going to break out, well, now you're down $1.50 or $2 right out of the gate, and this thing may decide to even pull back or take its time under resistance before it breaks out. So just set your alarm at 55, and then once you get the trigger, then you can decide if you want to take the trade or not. And then lastly, wrapping up with Logitech, this is another bracket trade. Logitech broke down on earnings, gapped down about $8. The high of the day was 112. The low of the day was around 106. And what I've done here is change it just a little bit, just because of the proximity of the 200. You can see here that price is respecting that 106 level, bouncing along the bottom. But do you really want to try a short with the 200 right there? I wouldn't want to take that trade. But if it lost the 200, then you've got a path to 100. And if things really start to fall apart from there, you've got a path to 90. And so those would be the levels that I would mark. I would mark 112 for a move into the $8 gap, and I would mark 105 as a potential level that if it lost the 200, you could get a very objective short entry there against the 200 with a stop just above, and then take the trade there. Because if you draw this out and you consider this action right here as a bear flag, so you've got an $8 to $10 move down to here, and then if the flag breaks down, you've got another $8 to $10 down from 106. That puts you down in the 98 to 100 area. So that would fulfill that technical target. But I think once you lose 100, I think it would probably go pretty fast down to 90. So, but the key is getting a good entry. As it is with all of these trades, have your alarm set. Don't front run the signal, because this thing could turn around and fill the gap. It looks bearish now, but things change. So you just set your alarms, and that's really the beauty of the bracket trade. Sometimes it takes a few weeks for these things to either break higher or break lower. But once you have the alarm set and you've long since forgotten that ticker symbol, you'll get an alarm during the day that, hey, Logitech either broke down or broke higher, and then you have the option of taking the trade or not. And speaking of that, as we set all these alarms, I've given you 10 stocks where you can set alarms. Just because you set an alarm and it fires doesn't mean automatically take the trade. You've got to have that in balance with the rest of your portfolio. For instance, if you like trucking, I gave you 2 names that are about to break out. If you like rails, I've given you 2 names that are about to break out. Now, if all 4 break out, do you really want to have 2 truckers and 2 rails? Maybe you don't. If you do, then take the trades. But maybe you just want one of each, given everything else that you may have on at the time. Or you may say to yourself, hey, I like this setup, this one breaking out versus another stock that I have in my portfolio that really hasn't been doing a lot lately. Maybe you close that one out and switch it out for one of these ones that are breaking out and showing some relative strength. So let's leave it there. If you appreciate the analysis, I'd love to have you join our crew. Hit the subscribe button and the alarm bell. That way you'll be notified of my YouTube content. And if you want to go the extra mile, look over in the show notes and you'll see a link where you can jump over to the website, register for all my content with your email address. It takes 15 seconds. That way you'll get all my content morning, noon, and night. And you'll also get an invite to our trading room where we would love to have you. A lot of sharp traders there. And most of them are very generous with their time and ideas. So you'll find it a nice place to hang out. A lot of positive camaraderie there. And I think you would not only enjoy it, but get a lot of trade ideas as well. So I encourage you to do that. Longtime viewers and followers, thank you so much for the support. Do me a favor, pass the link along to your social circles and trading friends. Maybe someone there will also appreciate the content and want to join our team. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.